how long you been trading in general, Alexandra?
Just like almost a year. I started in January last year.
Okay, beautiful.
Yeah.
How'd you get interested into it?
Well, it's it's a long story. I guess I got introduced to the stock market when I was in high school.
Uh-huh.
Um, uh, like a senior in high school, I was in the there's a program that called Finance Academy of Finance,
Okay.
and you had to be, there was some certain criteria that you had to have in order for you to get in the program. So I got in the program, and then they brought us to New York on the trading floor, and we had we visited that, and that was pretty exciting to me. And that really got me interested into the business world, not specifically trading.
Sure.
So after high school, I went to college. I majored in business management, and my first job was I worked for a bank as a fund accountant, and basically what I was doing there was calculating pricing for the municipal bonds and futures. And
Nice.
it was a pretty tough job. I didn't like it,
Yeah.
but um, I spent like 4 years on that job. And after that, then, went on with my life, got married, have kids, um, then became a stay-at-home mom. And then from there, I've been doing like, other things like businesses and stuff like that. Like I jump into the marketing type of thing, like network marketing. I did that for a little bit, was a little successful with it, but I just couldn't handle, everything else that came with it. So
Right.
then, then I went into the insurance industry, and I did insurance for like a year and a half. Now, insurance was okay as far as money wise as well, but what I didn't like was the fact that I had to drive every day to go meet clients in their home.
Yeah. Were you doing home insurance or auto insurance?
It was life insurance.
Oh, gotcha, gotcha. Okay.
Life insurance. So basically, then I would have, I mean, I buy leads every week, calling people every week to, make appointments and go see them, and it was just too much. I'm like, nah, that's I can't keep doing that.
Yeah. I was about to say,
And
so you've been through
so,
the grind.
huh?
So I was about to say, you've been through the grind, huh?
Oh yeah, oh yeah. And so I'm like, I need to find something else that I could, my ideal way of working would be, something where I can stay home and I can, earn a great income from. I don't mind working hard. Um, and so I was browsing the internet, on YouTube and looking at stuff, you know, to supplement income while I'm doing insurance. And so this one video kept popping up, and it was TradeNet. So
Yep.
I was like, what is this? And they keep popping up all the time. So then I'm like, okay, let me go in, let me take a look at it and see what this is all about. And then so I started learning about, the trading world again. And well, that sounds interesting. I mean, I wanted to try it out, and that's how I got started.
Gotcha. I love it. Okay. So how'd you end up finding my channel or my stuff?
Your channel, well, through all the bruises and stuff that I've been getting from this.
Yeah. Yep.
I mean, I'm bruised. Yeah. So, um, every day I'm like looking for different teachers, different people, and programs and stuff like that. I mean, I've found a couple of people that I've started following and watching their stuff, and then I think I found you not necessarily on YouTube. I think I went on Google and typed in some kind of keyword, and then the first thing that came up was one of your video that come up, and then I went and watched that, and I was like, well, that's different. So
Nice, nice.
I was like, well, that's different, I mean, because usually, like, the other programs that I watch, it's usually like, okay, they give you the sales pitch, and then you get into the program and stuff like that. And I was like, okay, and then how much is it? And so, then your approach was very totally different. And I was like, well, okay, let me kind of follow this guy and see, you know what I'm saying? Like what he's
Yeah,
up to.
yeah.
So then I watched a couple of the videos that you had on YouTube, and I went on, and then I signed up on your site and started learning stuff there. And that's why I was like, well, I wonder, if, and then I read about the professional account thing that you guys have,
Sure.
the hedge funds. And I was like, well, I wonder, I mean, that would be good if I could start something like that with you, since, with TradeNet, it's really, it's overseas, and, you know,
Yeah, totally,
um,
totally.
so
So tell
that's,
me a little bit about that. I mean, are you trading CFDs through TradeNet, or are you actually trading stocks?
I think it's CFDs, because they said, because a lot of people are saying that you don't really have, like, whatever that we do doesn't really have an impact on the market. So,
Okay. Gotcha, gotcha. All right. Well, I mean, what we can do is so kind of give you an idea. My main goal is I'm going to be, I'm going to do my absolute best to get you really, really comfortable with kind of like a plan, what to look for, what type of gaps to analyze. I will give you a little bit, some quizzes, make sure that you're comfortable with understanding like risk and you got all that kind of planned out. Because I mean, as far as the hedge fund, we can obviously talk about that, and we have as long as you need. Okay, so don't feel like I'm being rushed.
hmm
We can be here as long as you need. All right.
okay.
So it's just me and you. Um, but yeah, we're gonna go through a lot, and I do want to go over some of the previous trades that you've taken. Look at those, see where you got in, see where you got out, and kind of develop a plan with some rules, and really just see how well you stick to that plan, because that's kind of what you're mentioning in your email is one of your struggles as well. And that's just going to come with time. But I mean, realistically, the discipline aspect of trading, brand new year, new start, it seems to me like you'd have a pretty good time with going, okay, this is what I'm going to do, and just sticking to those rules and following them really, really closely.
Right.
Because that's going to be the key to trading. I mean, that's it. It's treating it like a business, or treating it like a job where you have, just like in any other job with your insurance or anything that you've ever done in the past, exactly how to get fired.
Well,
you know,
absolutely,
you know what to say, who to say it to in order to get fired, but you don't. So it's, trading is the same way. It's like we got to have a certain thing where, sure, we know there's a lot of other ways to make money. We know that you're going to miss opportunities every minute of every day. As long as you catch one or two good trades a week, that's all you're going to need realistically. And just trying to be able to track and catch those is going to be a huge step in the right direction. So let me get a notepad pulled up here. Create a new one. Where do you live, by the way, Alexandra?
I'm in Mansfield, Mass, in Massachusetts.
Okay. Very cool. All right. So let's dive in. Give me, as far as the trades that you've taken recently, go ahead and just give me, what was the most recent trade that you took?
Right. I have to log into my thing because I didn't trade for the last 3 days.
That's okay.
Uh, um, what is this? I have this thing came up says choose your email service to send invitation. Invite people to join a meeting.
I don't know what that is.
All right, so I'm trying to see how do I get out of how do I get out of this so I can log into my I think I took Tesla and I took and I traded. I believe I traded my last couple trade was Square too. I traded Square. Um,
Do you know what days?
last week I traded on Monday and Tuesday. That was it.
Okay, Monday, Tuesday
And
last
both
week,
trades I
and
took
so you
were
took Tesla and Square.
that's going to give me a minute. Let's see this one. Trade history would be December. Okay, let's see now. Now I'm in. I'll be able to see exactly what I did on the 17th. Okay, highlight. So on the 17th of December, I traded J&J. I traded Nvidia and then Tesla.
J&J, Nvidia, and Tesla.
Mhm.
Okay, beautiful. So the 17th of December, which was Monday, right?
Yeah.
All right. So let's go look at Johnson Johnson, and we're gonna kind of go analyze this really quick. First, I know you said you've been through some of my classes. So let's do a really quick test. What type of gap is this on Johnson Johnson?
Oh boy, I'm still studying those gap things.
That's okay.
I hold on.
So this one's called a retest gap. But let's mostly talk about why. All right, let's talk about why, like the sentiment behind the gap. And I like the fact that you did trade Johnson Johnson. So that shows me that you do at least pick good gaps because I do like that gap. I also watched it and traded it that day. Reason it's a retest gap is because you have a lot of people selling Johnson Johnson the day before, right? You have this giant bearish candle. Do you use red and green candles or black and white?
Red and green.
Red and green. Okay. So this would be a red candle, obviously a bearish candle on your system. And when it gaps down the next day, you'll actually notice that you have a white candle here on Johnson Johnson. And the reason
Right.
it's white or bullish
Which is
is
green, yeah.
because, what's that?
No, I said which is green candle for me. Yeah.
Yep, exactly. Green candle for you. And the reason that is because you have a retest going on. So everyone who sold short on this day, they're profitable.
Mhm.
Right. So when you have a bunch of bearish traders who are profitable, at some point they're gonna buy to cover or buy to close,
Mhm.
and that buying is gonna cause what I refer to as the retest. Now here's a question: do you mostly trade bearish or trade bullish?
I
Or
do
does
both. I do both, but I like bullish better.
Okay, gotcha. So let's go in and peek at Johnson Johnson. What time frame do you trade, Alexandra? 1 minute, 5 minute, 3 minute?
5 minutes.
5 minute. Okay. So what time did you enter and at what price?
Okay. Okay. I shorted Johnson and Johnson 934, 30 shares at 128.
And where was your stop loss?
128. My stop loss was going to be 128.50.
And you're using the 5 minute chart for that?
Yeah.
Gotcha. Okay. How'd you determine a 128.50?
Well, uh, let's see. I get at 128 because when I was looking at it on the first, was it 9:30? Candle. Is that the 9:30 candle?
Yep, this is the 9:30 first 5 minute candle right here.
Yeah, so I calculated like the number of shares because I had, I think it was from one video that I learned this, the number of shares, my maximum risk. And
Uh-huh.
I know that it's right now it's $15 per trade because I'm like almost out.
Almost tapped out. Yeah.
So so I figured, okay, if I take 30 shares, um I only can um
Have a certain stop.
certain stop, for
Gotcha.
50, yeah, 50
Gotcha.
cents.
Okay, I can appreciate that. And
Stop.
when it comes to trading, like I said, I know that like I said, we'll get to the fund and everything a little bit later, but the day trading environment is something that it's going to take time, obviously, to get really good at, and it's going to take practice and a lot of time and energy spent into it. But it is simpler than people make it out to be. So let me talk about this trade and just kind of discuss what I like about your entry. Obviously, you got stopped out on the trade, right?
Yeah.
Okay. So let's talk about this one for just a moment. First of all, if you're trading in the first 30 minutes of the day, you probably are going to want to use a 3 minute chart or lower, 3 minute or 2 minute, just get you better candles, get you better entries, because a 5 minute chart is going to be too slow.
Okay.
5 minutes are really good for after the first 30 minutes of the market. And like I said, I'm going to go through some of your trades and just try to pick apart what I like about it, what I don't like about it, and just kind of give you some more insight to how you trade now. Obviously, it's still going to take practice. It's still going to take some time, but you and I are going to be able to get through this together. So, like I said, don't stress about it. It's just regardless of how much money you have and how much money you use, this is a skill that once you do get it and master it, you can use this forever.
Mm-hmm.
So don't give up, is what I'm saying. It's going to take time. It's going to take some money lost. I get it. Everyone has the learning curve, but it's still a heck of a lot cheaper than a degree for a
Oh,
lot.
absolutely. Tell me about it.
So don't stress too much. Let me talk through the candles really quick, because if you play something bearish, this is the pattern that I want you to burn into your brain for the rest of your life. You ready? I'm going to draw a pattern that's going to make you hopefully hundreds of thousands of dollars over the next few years. And this particular pattern right here, that's it. this pattern. This is called what I refer to as the bearish S-curve. And that's what I want you to look for. Very frequently, it takes 30 minutes to form on a retest gap, which again is going to be a black candle gapping down.
Okay.
And usually what you want is you want a bullish candle or reversal pattern to happen right about here, right about there, and that's when you begin watching it. So for example, what I'm going to do is I'm going to take the drawing that I just moved and just slide it over on the screen. Check this out. So the exact same pattern, I'm just going to slide it over here. Same thing, and there you go. So what we have, if I kind of come back to here, is what Johnson & Johnson did is it was a retest gap, meaning it's a black candle gapping down. So you're going to have tons of people who are initially going to buy to cover, and that buying is going to cause the stock to trade higher, which is usually this part of the move. And the initial thrust down, which I'll draw in blue for you. So this part very frequently is either the pre-market movement or the gap. So if I draw it like this, right, that's the move down. And then you have the retracement up, and then you have the rollover. And what you're doing is you're waiting for bullish candles to come in with good volume, and then you're waiting for those candles to break lower with a good evening star pattern. So for example, on a 5-minute chart, so again, if you're waiting about 30 minutes, look at this candle right here. And let's talk about this candle, then I'm going to talk about a few other candles as well. But what do you notice about that candle?
There's selling pressure.
Yep, absolutely right. What else?
It's a green, it's a bullish candle.
Yep, absolutely. So that again, that's a key because you're looking for bullish candles to break down and roll over. So anytime you're going bearish, that's really what you're keeping an eye out for, is a bullish candle to break down. What I also notice about this candle is it makes a higher high.
Mm-hmm.
Now, the reason that's important is, do you think that people are going bullish right here?
No.
Answer is yep, they did. People definitely went bullish.
But people like me would have probably.
Yeah, no, I know it sounds funny, but that's kind of true. I mean, they're usually beginners.
Right.
They are getting in with a breakout right here.
Right.
They're getting in bullish. The problem is this right here is that's the gap fill area.
Mm-hmm.
And usually when a stock gaps down, if it fills the gap, that's about the time to start watching for the rollover. So what's interesting about this candle is also, do you see the volume? See how it's like the volume down here? See that big green volume spike?
Yeah.
And how it's bigger than all the other volume bars?
Yeah.
That's a really interesting signal because that's telling me it's like, okay, well, obviously a lot of people like this candle. You got people who are buying. It made a higher high. So people definitely went long there. And what I really like is you notice that upper shadow. So it does have some selling pressure. So you're thinking to yourself, or at least at this point, I'm thinking to myself, okay, people liked this candle. They went long on this candle. They went bullish on this candle. And they're expecting it to continue higher. Now you are planning for Johnson & Johnson to roll over. So you're not going bullish, right? You're already planning and keeping your eye out for that S-curve, for the bearish rollover to happen. So what you're doing is you're going to wait for that candle to close. And once that candle closes, right, at that point, nothing special has happened. Nothing really exciting. You don't really see much, but you're just waiting. And if I do this, sometimes it's easier to go kind of back in time and pretend. So if I come over here, right, I see this candle, and this candle forms, okay? Good volume, upper shadow, people are taking the breakout, they think it's going to continue higher. That's what I'm thinking at that point. But remember, I'm bearish. It gaps down. I'm expecting it to continue to roll over, so I'm looking for a bearish move. So this next candle that comes in, what's your thoughts on this one?
Well, that's a bearish candle.
Agreed.
It looks like to me, it looks like an indecision candle.
You're absolutely right. Yep, very correct. Indecision candle. So it's kind of like, in a way, a meaningless candle, but it also means a lot, because you're totally correct. It's a very indecisive, small indecision candle, not a lot of volume. People are just waiting. And if people who bought on that candle, if they did want to go bullish, they want to see it continue higher on the next candle. Would you agree?
Right.
Yeah. They want to get in bullish. They want to see it pop. They are cool with that candle coming in. They're fine with that, but they don't want it to break any lower. Right? They want that inside candle, and then they want it to break higher. So this is also what I refer to as an inside candle, because it's fully within the range of the previous candle. So it's an inside candle, totally within that previous range, and that means that, hey, this is purely a rest, right? You could get a break out of here, and then we probably just would leave it alone at that point for a bearish rollover. But if it doesn't, then we're going to kind of continue to keep our eyes on it. So let's go to the next candle. The next candle is really interesting. So here's the next candle. Notice the volume increase. What pattern does that form, by the way?
A bearish. It looks more bearish than bullish.
Yep, you are correct. It is a bearish candle pattern. I like calling this one. It looks to me like this is an evening star reversal. Have you heard of that pattern before?
Evening star, yeah.
Yep. So we got an evening star reversal because you got a bullish candle, an indecision candle, and then another bearish candle. And when you're playing an evening star, you want to get in below the low of the most bullish candle, which in this case is this candle right here. So your entry would actually be bearish. You'd be getting in right below the low of that candle where everyone got long, and your stop would go right above the high of this candle right here. So let's say if this is, so I'll draw some lines on here. So for example, if this is your entry, green line's your entry, let's say 130.09, and your stop is up here with the red line at 131.76. So if you have a $15 risk unit, how many shares would you take in this particular trade?
Probably 20 shares.
Let's find out. So we got 131.76 minus 130.09. So that's going to be how many shares? So we have, this is going to be a 6. We have 16. So this is 7, 6, 1. So 167. So we're going to take 15 divided by $1.67. And that's going to come up with how many shares we would actually get into this trade, and it's 9. So 8.9.
Oh, okay.
You're close, though. Super close. So we'd be doing 9 shares. Not a lot of shares, but that's okay. It's the process, right? It's not about the money. It's about the process initially. And that would be your setup. And it would be based on just this evening star reversal. Now, you didn't do that trade, which, again, not a big deal, not a problem at all. Let's talk about where you did get in and what I would have done in this particular situation. So this candle, the very first 5-minute candle, on a 1 to 10 scale, how bearish is it?
I mean, it looks very bearish to me because there's a lot of selling pressure.
I totally agree. So on like a 1 to 10 scale, what would you rank it?
I would say a 7.
I mean, I'd give it a little bit higher than that. I'd probably get like a 9, like that. I mean, that's a pretty bearish candle. right? You have this giant upper shadow. You got this huge volume coming in.
Right.
You know, it's a pretty bearish candle. But what's interesting about that candle, though, if we think about it, is a lot of people have already gotten in bearish, right? Meaning, if we're looking at this and we're not already in bearish, so we haven't already gotten in, I'm not going to get in after this candle. Because that candle tells me, yeah, it's a really bearish candle, but if I'm day trading, I don't want to get in after a bunch of people have already gotten in bearish. I want to get in when the move is starting. So what I would do is I would have personally waited for this. I would have waited just a little bit longer for a candle exactly like this candle to come in, this white one.
Mm-hmm.
Because on a really good gap, that's exactly what I'm doing, because an S curve can be very shallow. It doesn't have to be a really nice, pretty big S curve. It can be just a super quick boom, boom, boom. And this is a white candle, and that's all you get. So something like this 5-minute high wave, this is actually one of my favorite candles if I'm going to be playing it bearish. So I wait for candles like that, especially at the very, very early morning. And my entry is right below them, and my stop is right above them. And so in this situation, you can see that would have been an S curve and would have broken down, but it actually didn't. It actually just ended up going higher, right?
Mm-hmm.
Okay, so let's go look at, no, you said you did NVIDIA?
Yep. Let me go back to
All right, NVDA.
I did.
That's on the same day?
Yeah, I took 3 trades that day. So it was NVIDIA. I think I went long in NVIDIA.
Okay.
I went long on at 11:03 at 146.99. Well, I was gonna go on at, it was supposed to be 147. Then I went in a penny early, so it was 146.99. And my again, my stop loss. I'm not sure where I got one. Because I know Nvidia moves a lot, so I always give myself, when it comes to Nvidia and Tesla, I always give myself at least 80 cents to $1 stop loss.
Totally. Yep, I agree.
So my stop loss on Nvidia was $1.
Okay. And now, so how long did you stay in on that trade?
I stayed in it for a while, and then I didn't. I stayed in it. I got out at 11:15.
So you got in at 11:03 and got out at 11:15?
Yeah.
Gotcha. Okay. So let's talk a little bit about this one, and kind of go through a little bit on NVIDIA. Now, again, like I said, I'm recording this whole session because this particular thing I'm about to say is going to be really useful. The best trades are often the most uncomfortable to take. Now, here's what I mean by that. You've probably heard the word confirmation a lot in your video research, right?
Yeah.
What I want you to do is erase that from your mind, because confirmation does not exist. Now, that's just one of my things. I mean, I know that it's going to sound like crazy because you're like, man, everyone in the world always says wait for confirmation, and this one guy is saying not. Here's what I mean by that. The only thing in trading is price. That's the only thing that matters. And when you're looking at candlesticks, that's what you're doing, is you're analyzing price, right? Because these numbers over here mean something to people. You got to remember that. What we're doing is we're trading human emotion, right? Price going up, price going down. That's what we're trading. And so there's no such thing as confirmation, because people, when they react emotionally. They react out of fear or optimism. And they're not waiting for quote unquote confirmation. They're just waiting for the prices to either go up or go down.
Mm-hmm.
So what I mean by that is, when you took this trade, you were what I refer to as
I was waiting for it to break out 147.
I know, you were way
I was
too
way
late.
too late.
Yep. You waited for too much confirmation before you got into this trade.
Yeah.
That's what I was trying to bring up, because you waited way too long for confirmation, because the 147, not that it was a horrifically bad entry, but it was, like you mentioned, it was just really, really too late, because at this, here's one of my rules.
It's already made the move that I wanted it to make, I guess.
Bingo. And here's how I personally quantify that, because remember, that's what you have to do, is you have to ask yourself, how can I not, you're not going to have a lot of rules based on emotion, Alexandra. I wish that was the case, but it's really difficult. So for example, I'm not going to make you, create a rule that says, oh, don't trade when you're, when you're emotional in trading. Like that's the stupidest rule in the world. Like, we're always going to be emotional. I could say don't trade if you only got 2 hours of sleep. I could do that one, or I could say don't trade when you're mad. Most people know when they're mad, but something like don't get emotional when you're trading. That's a dumb rule, because we're always going to get a little bit emotional.
Right.
So one of the ways I could quantify chasing, okay, is this. Do not place a trade if you can look at the chart and see 3 previous trades you should have taken, should have or could have taken. And I'm gonna jot that one down on your notepad, because again, that's how I quantify it. So if I look at a trade and go, okay, if I'm getting in up here, that's where you got in. If I'm getting in up here, what are 3 trades that I could have taken? And I look back and go, okay, well, here's one, right? You got a morning star reversal pattern down here. So entry would be this red line, and stop loss would be this blue line. So that would have been a really good trade. Second one would have been the retest of the high of the day breakout right here. So when it broke above the resistance, so it broke above, you got 1, 2, 3, 4 white candles in a row. Here's your 5th white candle. This was a flag pattern. And then this candle breaks and closes above that resistance, and then retests and then bounces. So that would have been the second time at least. And then the third time would probably have been after this pattern, when it broke out right here. And that's very, very close to where you got in. So it wasn't necessarily a chase. In fact, it wasn't a horrifically bad trade, but it was one that you could have held on to a little bit longer, and it actually would have ended up making you a little bit of money. So realistically, you could have made an R on this trade, because if your entry was 147, your stop was 146, this candle wouldn't have stopped you out. It got to 146.18, and then it went up to 148.15. So if your risk was $1, you could have gotten 1 R on that trade. And then obviously we can see NVIDIA broke back down and actually ended up rolling over. And that's because this was, for most people right here, that was their chase. So your entry actually wasn't terrible. It wasn't really amazing. It was a little late, but not bad, right? Because I'm going through and I looked at 2 instances where you could have gotten in. So the one that you got in on was the third one. So it wasn't purely a chase, but you're going to need to know in situations like if you can go back and find 2 obvious prices where you could have gotten in before and you're taking the third one, you're going to have to realize that it's going to take a little bit of time to just kind of rest and trade sideways and bounce around a little bit. And after that third time that comes in, that's usually the trap. So this one up here is the trap. That's where all the newbies are getting in bullish, and then it rolls over.
Yeah. One of the things that I want to work on is that I think the reason why I got out pretty early in Nvidia is because when I took J&J, I was already
Down.
in the red for the day.
Yep. Totally understand.
And so Nvidia was my second trade. And I didn't want to be, you know what I'm saying? I didn't want to be red again. So I'm like, and I'm watching my P&L at the same time. So that kind of gave me like, I was very emotional.
Totally. No, I totally understand. I get it 100%. What was the other trade that you took?
I think the last one was Tesla. I went long on Tesla at 10.27, and I got out at 10.30. So I bought at 360, and I got out at 361.
And your stop was what, 359 when you got in?
Yeah.
When did you get out again?
I got out at 10.30 at 361.
Gotcha. Okay, so just on that flash. All right, great. So let me talk about this trade on Tesla. I actually do like it. This is very, very close to getting good. This was super, super close. You made profit on it, by the way, so congratulations. It's awesome. Let's talk about a really, really fun rule that I think will help you a lot that very few people talk about. And this is the rule. So 3 or more candles in a row of the same color, play the retest, pullback. So what I mean in this situation is on Tesla, when this candle came in, this is when you got in right here. And again, I liked your trade. I mean, it did work, but it could have been a lot better, because when you got in on this candle, that was 4 bullish candles in a row. And what you'll notice is you'll see this little double bottom right here.
Yeah.
So you entered on the breakout of the neckline of 4 candles in a row, which means you weren't chasing necessarily, but you were just a little bit late. What you could have done in that situation is saying, okay, what I'm going to do is I'm going to get into, and you'll be surprised how often this works, but you'll say, I'll do a limit buy off the low of this neckline. So pretty much when this candle comes in, you could have done a limit buy at the blue line and then set a stop down here at the red line. And you would have gotten, so look, retest, bounce. That could have been an absolute gorgeous trade. That would have been, if you held it, could have been a 3R trade. So you did do well, right? You made an R on the trade, meaning you're profitable. Because if you risked $1 and you got $1, right? But just with a little bit better timing, just a little bit, and holding the trade longer would have resulted, instead of from 1R, could have actually ended up making 3. And even on the entry that you did, I do love the fact that you got out, because if you didn't, this candle would have stopped you out. Sure. Right? So do you remember the bearish S-curve that I drew?
Yeah.
This guy? So let's flip it around a little bit, and I want you to burn this image into your brain as well. So this is the exact pattern, but in reverse. This is called the bullish S-curve. And this is where I want you to enter. So for right now, what you've been doing, and what most people do, by the way, so don't feel like this is, again, I'm here to help. I'm not here to judge. I've been through every situation you could possibly be. All the ones that you've done, I've already done them worse. All right. So I think you're doing great, actually. I didn't reach out to anyone for help for like 4 years. So yeah, not an issue. But this is where a lot of people get in. They get in right there. And then they either hold through the retracement or they get stopped out of the retracement. Because remember what I mentioned earlier is the best trades are most often the uncomfortable one.
Yeah.
So the reason is it's uncomfortable to buy, but remember, this is a really common thing. I want you to remember this for the rest of your life. If you're buying a stock, always buy it cheaper. Right? Never spend more for it. Just buy it lower. Just always remember that. Like, it just, if you have a price, you're like, all right, I'm going to buy it this price, set it lower. Because number one, it probably will fill. But number two, when you're buying something, you always want to buy it cheaper. Am I right?
Absolutely.
You know, I mean, it's like if you can get the same thing, because it's NVIDIA. So, I mean, it doesn't matter what it is. If it's a stock, if it's a car, if it's a dress, if it's a house, whatever the value is, if we can get that same thing that we want, but just less money, then why not? So, for example, if I'm going to buy a Lamborghini and I can get a Lamborghini for $10,000 cheaper, why not? It's the same car, so let me just get it. Let me get less expensive. So if I move this drawing over here to, and I'm gonna put it over the trade that you took. Check that out. Isn't that crazy?
Wow. It matches perfectly.
It always, yeah, it does. It always does. It's so crazy. And here's what's even funner. Check this out. So just for giggles, what I'll do is I'll pop in here to a 1 minute chart.
Yeah.
And all of these patterns also show up on a 1 minute. I'm not saying you have to trade them on a 1 minute. I'm just saying that it's all fractals. So everything is fractals, meaning if you can get, once you realize that everything is comprised of on top of each other, then your entries will start becoming so much better. And you can trade just one stock all day, numerous times. So look at this. Here's your bearish S curve right here. See that?
Mm-hmm.
Very nice bearish. So that would have been a gorgeous bearish play, getting in bearish right here, stop up here somewhere, would have been like a 2-3 yard trade. And then down here, we're starting to build a support. Here's numerous morning star patterns, right? Here's a morning star pattern. Here's a morning star pattern. So you're playing bullish. I mean, you could have gotten in right there with a stop down here. That's $1. And that's a nice 2-3 yard trade right there. And that's in the first hour of the market open.
Yeah.
That's 2 trades on the 1 minute chart. So the patterns, they shape up. And the crazy part is, I can draw numerous ones inside of each other, So for example, if I do blue over here, it's like this is, the bullish double bottom that bounced and then broke down. And you got like the small S curve right here that rolls over. And you get the double bottom down here. And then this is the S curve, the small bullish S curve. Here's a small bullish S curve right there. This is another bullish S curve right here. Here's another bullish S curve right here. So you get 3 small bullish S curves just in that 15-minute move on a 1 minute chart. So very frequently, most traders end up taking breakouts when in reality, you can just take the pullback. You'll very, very often just get the chance and the opportunity to get into the pullback anyway. What I do love, and I want to say, I loved the fact that you traded Tesla on the 17th. I personally would have been looking to trade it bearish. So I'm fine with you playing it bullish. And like I said, you made money on it, and I would not have been afraid to play it bullish. But if we look at this gap, I love gaps like this. These are some of my favorite gaps. They're small. Prior day has a lower shadow, and you're gapping, and you are gapping below support. So for example, on Tesla, when I say support, I mean like 2 to 3 days or more of support. So for example, if I draw a line right here, and I'm drawing that line, honestly, Alexandra, based off of this bullish candle right here, and then everything else just kind of matching up. So the support area that we're gapping below is the wick from this candle, is all the buyers from this candle, the wick from this candle, and the high from this candle. So it's just a really, really small gap, nice and cute, right below the moving averages, and just that was a wonderful gap to play, and that would have been one that I would have been focusing on bearish. Could have played it bullish, and you did, and you played it, you made money on it. But if you focused on it bearish, you would have made even more.
True. Okay.
Or you could have done both. You could have played a bearish, a bullish, a bearish again. You've done 3 trades on that same stock. Now, again, all that's hindsight. I get that. That's all fine. But let's just say, for example, on Tesla, let's do another example. Rate for me, let's say that we open right here on Monday morning on Tesla. How would you rate that gap on a 1 to 10 scale?
If we open below support.
Yeah, so if we open right here, there's like this red circle. If we open to that red circle Monday morning, how good of a gap on a 1 to 10 scale?
The gap would have been good. It's a bearish gap.
Yep. How good is good?
Because they opened up below support.
Yep. Why else? Because you're definitely correct, right? We know, like I said, when a stock's opening below support, that's a good thing, but it means more than that because the support is where people buy. And what happens is when you get a really good gap, like this one that we're looking at as a potential, if Tesla gaps down there on Monday morning, everyone who bought on this day and this day, they're going to be trapped and they're going to be losing money.
Right.
And that's really what we need to understand is it's just people who are buying when it gaps below support, it's real people out there who are losing money. So they panic, they freak out, they sell, and so we sell with them. Right?
Right.
And that's why I don't know if it's going to gap down there or not. It probably won't, but that's why it would be it'd be a really good gap. So those are from the 17th. What about the 18th?
Okay, since I traded 18. That was my last day of trading, really.
Okay. Do you have any before then?
Before then, like my on the 3rd, December 3rd, what did I trade that day? December 3rd, I traded Apple.
December 3rd. Okay. And let's so this is the daily chart on Apple on the 3rd. What type of gap is this on this day right here?
A bearish gap and go.
Almost. You got the gap and go correct, but it's bullish. So it's I know you said bearish though because these candles are black. But yeah, it's a bullish gap and go because you have these bearish candles and we were gapping up. So that's a really, really good gap. So what's good to me is you're picking the right gaps, or at least you're picking really good gaps. So that's great news. So I'm gonna go into the 5-minute chart on December the 3rd. And did you play that bullish or bearish?
I went bearish.
Okay, what time?
9:47. I went in at 182.
With a stop at 183?
Yep.
Okay, and target at 181 probably?
Yeah.
So what ended up happening on this trade? Because there's a few things. If you held it, you would have made a little bit of money maybe. Did you get out early? When did you get out?
I got out very, very early. I got out 181. I think I made money, then I didn't take it, and I was waiting, and then it went back up to 181.93, and I got out.
At what time?
940. Oh, I didn't even hold it that much. Okay. It says 947. I
That's what I
don't
was.
know.
Yeah.
That's funny.
Okay. Okay. Well, I mean, gotcha. So let's go through this gap and talk about it because I actually do like the fact that you played it bearish. Number one, what's exciting to me is you're not afraid to trade. That's the good news, right? A lot of these trades you're taking, like you're taking the trades. Let's look at this particular move because what's interesting on Apple is this pattern right here. What pattern is that?
That's Evening Star.
You got it. Absolutely. So what would have been preferential is an entry here with a stop right there. Right? That should have been where you would have gotten into the trade. You got in right here, which that was after 3 bearish candles in a row.
Yeah, I gotta be better at this.
Yep. It's okay. I promise. Like I said, that this is totally fine. Like I said, that's why we're here. But this is something where many traders will wait too long to get into the trade because they're waiting for confirmation. Right? They're waiting for a lot of information and a lot of details in order to take the trade. Let me blow your mind for just a second. So notice this blue line right here. So this blue line got formed when people started buying right there. Right?
That's the support line.
Yep, exactly. And so they started buying right here. Who in the world creates these lower shadows? Have you ever thought about that?
Those are the people that are selling. I mean, those people are buying.
Yep, those are the people that are buying, exactly. So let me ask you this question. How do they know how to buy there?
Because there's great support there, and so it's always better to buy at the support.
That's pretty much it. Yeah, that's the answer. Now, here's the crazy thing, though. Are there any like indicators or anything like that, anything that we're looking at right now that would have said get in there? And my argument is no. Right? The people who bought here, right? The people who bought here are only buying there because it worked last time.
Right.
That's it. That's all they're doing. That's it. So think about it. Like someone actually has to be out there buying at this blue line. So they're saying, all right, well, when the stock came up and when it comes back down, I'm going to buy at this price. And their whole reasoning is because it bounced last time. But just think about that kind of discipline that it takes to just buy at that support. I mean, just saying, okay, when it trades down there, is that uncomfortable? Absolutely, right? Because they don't know if it's going to bounce or not.
Mm-hmm.
But look at how good that risk-reward ratio is. If they're buying right here at this line, their stop is probably, I don't know, down here somewhere. But what that does is that gives them a 1-to-2 risk-reward ratio because they're buying so low. But think about it. What a lot of people have done, they're going to wait for this candle to break out above the high of this bearish candle and above the high of this bearish candle, and then they're going to get in bullish. But the problem is that's when the people who got in down here are going to sell.
True.
So what your brain's trying to figure out right now is, okay, well then, how do I get in lower? And the answer is you realistically just have to get really comfortable at picking spots that there's not that much information there other than price. That's going to happen very frequently where you're buying something and look at this trade. I mean, you actually had 3 opportunities right here, when this stock barely makes a new low, that would have been a great time to get in. Also, you have 4 bearish candles in a row. So remember, if you have 3 or more candles in a row of the same color, the only way to get out of a bearish position is by buying to cover, right? So when that stock drops down into support and you have 4 bearish candles in a row and then a bunch of people buy to cover, that's them getting in bullish, and that would have been, a really solid trade, buying at that support. So the reason I'm bringing that up is because same thing with the bearish trade is you want to get in as high as possible. So you always want to be looking for where are areas of weakness. So for example, on Apple, if you were going bearish, see this little small bullish 5-minute candle?
Mm-hmm.
Remember what I said when I was looking at Johnson & Johnson? Huge bearish candle, small bullish candle, entry here, stop here.
Yeah.
That would have been a beautiful trade. Right? Very, very pretty trade. You could have exited down here and then it bounces and you get another evening star, and your entry would have been almost the exact price as earlier. Entry here, stop here, and that one worked again, and the trade back down to that support. And then you would have already been buying to cover your position. And that's exactly what those people did, and that's why it bounced. So it's cool to be able to look at it and just see the sentiment of the moves, really just kind of look at it and say, there's real people buying off of this candle right here and causing the stock to go higher. And again, what we have to do as traders is do our best to enter down here where it's more uncomfortable, but we're going to have better risk reward ratios than getting up here or up here. Because like I said, we know it worked. We can see that if you entered, way up here, you could have gotten some money. But it's a lot better to enter lower if you're buying and sell higher when you're selling. What's the is that the only trade you took that day?
Nope. I also took GSK.
GlaxoSmithKline. Okay. On the 3rd of December?
On the 3rd, yep.
All right. How'd you play this one?
A bearish. So I bought at 932. Price 38.59. And I got out, what time was it? 9:37.
And you played that on the 5-minute?
And yeah.
So so you got in, okay, so within the first 5 minutes, got it. Okay, were you profitable on that trade?
Barely.
And you play it bearish, right? You want it to go down?
Yeah.
Gotcha. Okay. So on this one, if you're playing this, do you use pre-market data at all?
I do, yeah.
Okay, so let me turn on the pre-market data and see if I can see what you saw. All right, 12.3. And you got in at what price? 38.59?
38.50, yeah.
How'd you decide to get in there based on the chart?
It's supposed to be 38.50, I think.
Because you got in right at open, pretty much.
Yeah, it's like, yeah. Usually what I do before I usually like look at the pre-market and I don't know what is this? I usually look at pre-market and the pre-market high and the pre-market low.
Sure.
Then if I'm gonna play it bearish, then I usually wait. Now I don't always follow this, but I usually wait for it to break that pre-market low, and then I go in bearish.
Gotcha. Okay.
And it's the same thing with bullish. Like I usually wait for it to break the pre-market high, then I'll go in bullish.
Got it. Okay. So let's talk a little bit about that because so I'm looking at this trade, and if I'm looking at the pre-market data, what do you see the first 4 candles before market open?
The first one, they're very bearish candles.
Yep, correct. So if they're very bearish, if you have 3 or more candles in a row of the same color, what do you from here on out? What are you going to try your best to do?
Wait for the retest.
You got it. Bingo. That one would have helped you time your entry on this one a little bit better. I like the fact that you played it bearish, and because the gap is great, and I like how aggressive you are on it. But what was different on this trade is, for me, I would have probably done like a limit sell based off of this support right here. So I have a pre-market support. I have 1, 2, 3, 4 bearish candles in a row. And I would have said, all right, well, let me just sell it off of this support, old support, new resistance, and I'll put a stop up here somewhere above this pivot. And I would have expected this guy. I would have expected this bearish S-curve just like that to come in. Doesn't mean it would have worked, and it did in this situation. That would have worked fine. But just based off of pre-market, I could have made that determination to either A, get in on a pullback, or B, wait for a little bit more information just because you have so many candles in a row of the same color. But again, you didn't know that until now. But that's something that you going forward, I think you'll be able to use tons of data to kind of infer if you should wait or get in more aggressively. Now, I know I've been rattling on a bunch. What questions do you have?
Is it better? I mean, when you trade, do you look at your P&L?
Very good question. I do not. I'm going to have, this is going to be part of your plan, by the way. I already wrote it down. So you don't want to watch your P&L because you will get emotional. You just want to focus on the process, right? Don't make it about money. Just make it about the process. I know you want to make money. Everyone wants to make money trading. I get that. But that's a given, right? That's the thing, is what we got to remember is in the market, we have to do our best to remove variables. And what I mean by that is we got to do the same thing all the time, every time, and just keep it consistent. Mm-hmm. And when you're looking at a trade, imagine you were trading with $100,000, right? Your risk would be bigger, but the process is going to be the exact same. So the amount of money can change, that's fine, but the process is all about the process when it comes to trading. Because if you don't get the process right, you'll never make money. So good question, but no, I don't look at my P&L, and I'd probably encourage you not to as well. Just hide it and just take the trades based off of what's there, what's in front of you. Okay. Now, why did you wait so long between December 3rd and December 17th to trade?
No, I mean, I started trading December 3rd, and then I didn't wait. Let me see how many days I traded. For the month of okay, I traded on the 3rd, on the 4th, 5th. No, 5th. I traded on the 6th.
Oh, okay. So you got more. Okay. So what?
I got more. It's just that after a couple of, because I've been red every single month.
Yeah.
So now I'm like, oh, I'm exhausted.
I understand. Hey, I totally get it. Well, let's look at.
I don't understand. Every single month I'm red. So now, and because I'm so close to my
yep.
to losing my account right now, So I'm like, okay, I'm gonna take a break in between, a couple of days, not trading, and just take a breather, and then maybe go back and see if I can do better.
I understand. So let's look at some of from December 4th.
Actually, December 3rd, I also traded two others. I traded NVIDIA and Square, so I took 4 trades that day.
Okay, so let's go look at NVIDIA. So NVIDIA on December 3rd, how'd you play it?
NVIDIA, I went bearish on NVIDIA. I bought at 169. What time was it? 10:59.
Okay.
And that was a loser. So.
Yep. I was just about to say that one. So that loss on that one. Now, so while we're here, let's look at it. And I'm going to come back to the candle that you got in on the trade on. All right. So here's what you were looking at. This is a 5-minute chart, right? So if you're looking at this trade, based on the 5-minute chart, can you see 3 times where you could have gotten in or should have gotten in bearish?
Yeah.
Okay, perfect. So that'll be, because I can also. I can also see 3 times, right? We should have gotten in. Again, even in hindsight's fine. Use hindsight to your advantage. Could have gotten in bearish here. Could have gotten in bearish with a breakdown of that candle, or could have gotten in bearish with a breakdown of these 2 candles. So that's 3. So that means this trade, don't take it. Because so here's the other thing. Low of day and high of day pre-market breaks. The only time you want to trade the breakouts of those if it's a really, really good gap. And
what do you mean by a good gap? Like, what's the criteria for the really, really good gap?
Great question. We're going to go look at something in just a second. I'll show you. If you do take the breakout of pre-market high or low, wait for the first 5-minute candle to close, and then take a retest. So the first 5-minute candle is going to be very, very insightful, because on this trade, this very first 5-minute candle, see how it broke the pre-market high and then just reversed? So that's everyone. By the way, the break of pre-market high and break of pre-market low is a very, very basic strategy. It very rarely works because it's too easy, right?
Right.
If it's easy, it's not going to work.
Yeah.
So just go ahead and kind of pretend that it doesn't exist, because if you're going to break a pre-market high and pre-market low, everyone in the world does that, and everyone in the world loses when they do that, because people like me will play the opposite. And because it's hard, it takes conviction, and you got to be a little ballsy, and you just got to be aggressive, because you don't know if it's going to work or not. So if you're going the opposite direction, I'm saying it can work, and I'll show you some examples. It has to be a really good gap, but also if you do take a breakout, wait for that 5-minute candle to close and let it close past the pre-market support and resistance.
Okay.
So that'll be one step. So the second one is, what's interesting about this trade is I do like the fact that you took it bearish. And check this out. So this is your pre-market low, by the way, right here. So there's the pre-market low. And this next candle is when you get in bearish. You get in bearish right there. Closes below pre-market low, takes out the low of this candle. Everything should be great, right?
Right.
Now,
like the opposite on me.
Exactly. Now, we know it doesn't work, unfortunately. We know you end up getting stopped out. But, yeah, the breaks of pre-market low and pre-market high, they're just too easy. That's the unfortunate thing, is that people just take advantage of those because they're so easy to spot. Like people like me, I'm buying down here. That's the thing, is I'm buying. So I mean, you're shorting and I'm gonna buy. I'm gonna short up here. I'm shorting here and buying down here.
You're buying down, right?
Yeah. Because remember, when we sell, we want to sell as high as possible.
Right,
And
right.
when we buy, you want to buy as low as possible. So if a stock is coming into pre-market support, I'm thinking about buying down there. And so is everyone else, by the way. Everyone who makes money.
Mm-hmm.
And then when it fails, then we'll know, okay, it doesn't work. But until then, that's what we're trying to do.
Right.
So in a situation like this, what I would wait for, again, if you're looking for a pre-market support or a low, is wait for a strong bounce off of that support, which is that candle right there. So
That
once
was a pretty strong candle. That was very,
really
very
strong candle, yeah, and it's unfortunate that it happened, and I get it, but the reason that that's occurring, so that you know, is because you've already had 3 instances to go bearish. And
Right, right.
that's just the wave rotation. That's just the structure. If you have this, 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 that's just the structure of the market. The market moves in waves, and it usually moves in waves of 3.
Threes. Okay.
So if you can see 3 instances where you should have gotten in, that means that 3 waves have already occurred. Now, I know this is hindsight. I get it, that trading in hindsight is much, much easier. I realize that. But if we can remember that we want to sell as high as possible and buy as low as possible, that's going to be a really, really good help. And again, if you can remember the rules of 3, you can say, okay, well, I can see 3 places where I should have already gotten to this trade. I'm just going to wait. When this candle comes in, I actually, at this point, I would have made money because I would have bought down here, and I'd already be up $1.50. So I'm now looking to sell. So I would say at this particular point, keep an eye out for an evening star or rollover pattern, and then we'll go bearish. Let's just see what happens. Okay, so next candle. Okay, so the very immediate candle gets a little bit of a breakdown. You get an inside candle, a little bit of a lower shadow. So I'm thinking, all right, if this does break down, I'll take the entry. If I'm going to get in bearish, I'll do my best to get in bearish below the low of that candle. And I really want one more candle to trade sideways before I get in. So I'm going to wait just a little bit longer and then let it, if it breaks down, I'll do a limit sell. Okay. But I'm asking the market to trade sideways. One more candle. Okay. So what's great about this candle is you see a little bit of an upper shadow.
Mm-hmm.
So that means to me that I'm going to take this stop, and then now I'm going to move my entry up a little bit more. Because remember, I want to sell as high as possible.
Right.
So what this says to me is we got this support resistance right here. We're retesting the support resistance. I'm looking for this to roll over. So at this point, I'll set that trade up and say, okay, I'm ready to go. And next candle. All right. So you see the next candle, we didn't get triggered into the trade, but it broke above our stop. So
Yeah.
we broke through. We have this giant upper shadow. So that means now I'd have to kind of recalculate the shares. I'd move up my stop. And I'd keep my entry at the same price. Next candle that comes in. All right, now we're in bearish. And this is actually a really good example because this would have been 171.26 by 170.26. So this would have been $1 risk on the video.
Yeah, yeah.
And again, so this is right. So this is pretty much where you got stopped out. You got stopped out on this big candle right here.
Yeah, I did. Yeah.
Yep. And so a lot of people like me, I look for those candles because I'm able to come in and say, okay, what happened is I'm looking at this chart and going, a bunch of people went in bearish here and then they got trapped. And then you have a bunch of people who went in bullish right here and they got trapped. Because those people went long. Because remember I told you people went long off of the support?
Yeah.
There's also people who waited too long to go in bullish and they wanted confirmation the trade's going to work. So they waited for the breakout of that candle and that candle. So they went in.
Yeah.
Exactly. So they went in long right there, and so they're trapped. So what's really, really useful is waiting is not a scary thing. You can wait long. That's fine. Just can't wait too long. It's like this beautiful blend of waiting for the perfect amount of time when the trade's set up, so then you enter the trade, and being able to wait. Here's the key. Wait to see who is trapped. That's going to be a really, really good indication for your trades from here on out, is who's losing money. So for example,
the way you determine that is by looking at the candle, like let's say where I got in, and then if you see like a really bullish candle, is that what you?
Bingo, exactly. So for example, right here, see this giant upper shadow, right? I can say, okay, well, obviously that's a failed high of the day breakout. So I know people are getting in there bullish. So what I'm looking to do is I'm looking for this candle right here, the first 5-minute candle. I'm looking for that to break down to get in bearish. So I'm getting in bearish on NVIDIA right around here somewhere, because I can see that those people are trapped. I can see that they're losing money, and then if this thing breaks down, I'm going to get in bearish. So by the way, we haven't seen if this trade works yet or not, so let's find out. So this is, I've only been in the trade 5 minutes. Let's see what happens. All right, so the next candle looks good. You see this giant lower shadow. So that's going to scare me a little bit, because we have 1, 2, 3 bearish candles in a row. So I actually expect something like this to happen on NVIDIA before it rolls down lower. So what I'm going to do is kind of put into my brain, okay, there's really a good chance that we're going to get a rotation here. And if we get that rotation, don't freak out. Just hold through it. So that's what I'm going to tell myself. Look at that. Look at this. Here we go. So here's the rotation. Next candle. Boom. Beautiful. By the way, see this little upper shadow right here?
Yeah.
That's all the people getting stopped out who took their entry and moved it down right there. Because they didn't wait long enough.
Wow.
Like I said, the market is a perfect blend of waiting too long, of crushing people who wait too long and punishing people who don't wait. So it's a blend of having patience, but not too much patience.
Not too much patience, yeah.
Yeah. So that's what's
I've been on both sides.
Oh yeah, totally. Me too. Oh, that's what I'm saying. Me too. The only way I've learned this is just through years of punishment. But the good news is I can help you shorten that learning curve, because one of the things that you're going to want to do, Alexandra, is every trade that you're in, you want to tell yourself one of 3 things. You want to kind of tell best case scenario, worst case scenario, and what you think is actually going to happen.
Mm-hmm. And how long did it take you to be profitable?
That's a very good question. So the ironic part is I actually started out profitable, and I kind of knew what I was doing very, very early. So I just started doing a very simple strategy called covered calls. Have you ever heard of that before?
Mm-mm.
So covered calls is where you just buy stock and then you rent the stock out and you make money as it goes up. And if it trades sideways, you still make money, just kind of like renting a house. And I can send you a video on that, by the way, too. But when I started doing covered calls, I made money early early on for the first 3 to 6 months of my trading career. And then I switched to something I did not know how it worked, and I lost a lot of money. And then it took me about 2 years after that of really just learning and studying and grinding. So I'd really say probably 3 years of just being a miserable failure at this to finally get profitable. And when I became profitable, it was only after I did what we're going to be doing in the next 20 30 minutes, is like building a set of rules and following them like it was my job.
Okay.
And I wasn't very profitable. Like, so year 4, so this was 6 years ago. So what was that? 2013?
13, yeah.
2013, 2012, around that time frame. that was when I first started becoming profitable at trading consistently. And it wasn't a lot. It was like $50 a week, but it was very small. And all my whole goal was just to kind of focus in on gaps and candles and just really practicing them. And I didn't understand why I was getting in certain places. I would just kind of get in. But, that takes time. Like I said, the candlestick sentiment is what you want to learn. Like the thing I just showed you right here, like that didn't come to like 7 years in. Understanding why that happens and that it does very frequently. Like I can almost tell you right now that I would give this 20 minutes to make a new low. And if it doesn't, I'm going to lose money. And if it does, it's going to work. All right. So that candle right there tells me this trade's going to work just fine. There it goes, new low. And then next candle is probably going to be white because that's 3 bearish candles in a row. Look at that.
That's the other thing too, that for some reason my losing trades, I tend to hold them longer
Yep.
than my winning trades.
Yep. Absolutely. Because it's easier to lose than it is to win in the market. And here's why. You can control everything other than the stock movement.
Right.
So when you get into a trade, you already put in your brain already knows that you're going to lose money sometimes on some trades. So your brain's saying, well, we're already going to lose anyway. I know we're going to lose. You just kind of like factor it in, like just kind of say, okay, well, this is just my learning experience. This is my cost of tuition. But when you're winning, your brain gets so excited because it happens so rarely. It's like, oh my gosh, I'm green, get out. I need to lock in gains. Everyone says cut your winners early, that stuff. And it's just like, so it's like I said, it really is a blend. And we're going to try.
That is so true.
Yep. And it's like, oh man, this is so great. We're finally up, because you can't control when you're right or not.
Yeah. Yeah.
So yeah, like I said, it just happens. It happens often. And there's the money candle right there. That's it. And that's the trade. And even right there, because that's the thing, is right here, I love this trade. And I don't even see any reason to get out yet. A lot of people get out, but again, you got to understand that's 10, 20, that's 35 minutes I've been in this trade. So far, I haven't seen any trade that you've taken last more than 30 minutes.
That's true.
Which tells me that your entries on your stops are too tight, and you're just not being patient enough. Which is not a problem, by the way, necessarily. But since you're trading on a 5-minute chart, you got to chill out. Right? The best trades are usually going to take an hour. I know you've seen Mir Barrick, and by the way, I'm good friends with Mir. I know you've seen him take trades and make tons of money in the morning. He does it with a lot of size, and I know he's in and out. Yep.
Oh yeah.
And I know he's in and out really, really fast. I get that. But he's also been doing this 20 years.
Yeah. Like the other day I was watching him, it's like, okay, this guy, he just made $9,000 in one day. I'm like, okay.
Yeah. Well, that's the thing, is he's also doing it with a lot of size, but you'll be able to get there, but that will take a long time to approach like his style and his level, but you'll have the ability where you can make this an income producing, project, a cash flow stream for you and your family. That's very possible. It just comes down to understanding what's real. And what's real is trading on the 5-minute chart. It is going to take you at least an hour to make a really good trade.
Yeah, and my other thing is when like I'm in their trading room, but when they're trading different, like three different stocks at a time. Like they're going in and out, and I'm like, I'm so slow. I'm like, I can't.
Yeah, you're not going to be.
I can only focus on one right now.
I know, and that's okay, and that's totally fine. And like I said, that's I implore you to do that, to just focus on that one, and because what's happening is you're trying to be too much like them, but you don't have those skills yet.
Right.
And I'm not saying I'm better by any means, but I'm better at instructing it because I realize that most people are not fast.
Right.
And it's like, hey man, if you can take one trade a day and make money, perfect.
Mm-hmm.
Doesn't matter how many, it's very similar to, I have people in business, who brag about how many employees they have. And because I own some businesses and create some businesses, and people go, oh man, I got 40 employees, whatever. I'm like, dude, employees are expensive. Like it's not something to brag about. So the reason I'm bringing that up is same thing with the amount of trades. Like if someone says, oh, I take 100 trades a day, dude, there's nothing to brag about on that. That's a lot of work. Like, geez, man, 100 trades. Oh my God. I'd rather take one trade and make $100 than take 10 trades and make $100.
Absolutely.
Okay, so you said you took Square also on that day, right?
Yeah, I took Square. Let me go back and see what I did on Square. Okay, Square. All right, I took Square at 9:41. And I went bearish on Square.
That's my girl. Okay. That's beautiful. And where was your stop?
My stop was 60 cents stop.
It's like what, 70?
I got out early. I don't know why, but I did. Yeah.
What time did you get out?
43.
9:43?
Yep.
Sorry. I didn't mean to laugh. That's funny. That cracks me up. You saw some green and just bailed. Oh man. Because here's the thing. So here's what I want to do. Let me show you the trade you took on Square on the daily chart. So here was the daily, and so you see all these white candles in a row?
Yeah.
White candle, white candle, white candle, white. So that's why you sold it short.
Yeah.
Okay. So first of all, perfect. The unfortunate thing is you did everything on that trade perfectly other than your exit. So let me show you why. This is the pre-market low. You see the pre-market low right here?
Mm-hmm.
See that first 5-minute candle?
Yeah.
Look at that. That's what you want to see. Okay. It closed right below it. Beautiful. All right. Then it retested. So check this out. Ready? S curve. See that?
Yeah.
And you got in right here. Perfect. I mean, literally, that's the best entry that you've made yet. That is a phenomenal entry. Impeccable. And you could have done really, really well in that trade, but you got out just a little bit too early.
Way too early.
Yeah, way too early. So, all right. What I think we'll do, and so here's kind of my goal is let's go ahead and start building you some rules. And how long do you want to keep a $15 risk unit for?
Well, the only reason I have a $15 risk is because now I'm like only $300 away from losing the account. Gotcha.
Okay, no, that makes sense. So for right now, you can keep that. That's totally fine. I mean, realistically, just make it 30. I mean, because if you blow out the account, you have the option of putting money back in. So let's just talk about that really quick. So if you put in $3,000, how much do you get? 30.
With TradeNet?
Yeah.
No.
60.
TradeNet. Well, the problem is I keep upgrading the account, but my thing is every time I upgrade, I don't start brand new. It's like whatever I was negative on the previous account move along with me.
Oh, wow. Okay. Interesting.
You know what I mean?
Yeah.
So I've upgraded 3 times, but every time I upgraded, like I was already negative in my previous account, like 10,000. So that 10,000 carry over to the new account.
Oh, wow. Gotcha.
So that's why I feel like I'm like, oh, I'm never gonna get out of this thing because it's like I feel like I'm never gonna be able to be in a positive because I keep carrying those negative balance with me.
Yeah.
And it doesn't really give, and I'm spending more money to upgrade and they're giving me more money. Like right now I have, my account is like, what was it? I have a $400,000 um buying power,
Right.
but when I got the $400,000 buying power, I was already
In the hole.
what was it, $10,000 in the negative.
Sure. So now you only have $300 of equity, right?
Yeah.
Okay.
So
If you put in $3,000, what would happen? Would you just have $3,000 of?
well, now I don't want to upgrade anymore because if I upgrade again, I'm gonna carry over the negative balance.
Okay.
But if I were to lose the account and start over, then I can start over to like a brand new account without actually carrying over the balance.
And how much
So
would you get?
$1,000 would give me yeah, like 25, 30,000. Yeah.
Okay. So yeah, so I'll talk about the pros and cons just really quick of the fund. I mean, everything has pros and cons, right? The hedge fund with a it's technically 2,995, so it's not exactly 3,000, but you're gonna get $30,000 of allocated funds to day trade with. However, you can only lose $2,000 of that amount.
Mm-hmm.
So if your balance goes from 30 to 28,000, like your account's frozen.
Mm-hmm.
What else? So there's an $11 a day maintenance fee, $11 per day, or $77 a week. Now, that's really how the fund makes money, just being simple and being clear. But if you make more than $100, you can waive that fee. All right. So if you make more than $100, you can get the fee waived. Here's what when I first started trying to do is just try to make more than $11 a day. That was my goal. So I was like, let me just try to make $11 a day. So because I didn't think about it as a money generating machine, I viewed it as a way to test my abilities without having money that I could actually day trade. So my thought process was, let me just get in here and just test and practice and learn. That was kind of my mindset for a while. So my whole goal was just to make more than $11 a day. So with that being said, the only other fee is the fund keeps 10% of whatever you withdraw.
Right.
This amount comes from the $2,000 in positive equity, so it's not like you have to deposit that or anything. So that just comes from the $2,000 of equity. Most people on average end up spending somewhere between like 160 and $220 a month for the fund, just in those fees. And again, as long as you can make more than that, you can cover. Because again, you're going to have hopefully a day where you make more than $100, so you can waive that $11. But not yet. I don't want you to start with it yet. I want you, because even with TradeNet and everything, I would rather you get your timing down, because the amount of money doesn't matter at this point. Again, you could have $100 million and you're going to be losing money.
Right.
And I know that. So I would rather me and you just practice and email each other back and forth and do a session or two before you put any money in, and just practice your timing. Because if your timing is right, you can make money anywhere. And if your timing is not right, it won't really matter. And I don't want you losing more money, I guess is what I'm trying to get at.
Right.
So, Yeah, again, so both TradeNet and the fund, they're very similar. Yes, TradeNet does trade CFDs to my knowledge, and you will actually be trading, funds. It's an SEC regulated hedge fund, here in the States. So, so that's, pros and cons that way. If TradeNet's offshore, the fund isn't. All right. So let's go through some quick rules. And rule number 1. Don't chase. And here's going to be some of your chasing. How do you know if it's a chase? Here's A. Okay. This is going to be A. This is B. B is going to be if you have more than 3 candles in a row of the same color. Wait. C. If you do a low of day or high of day breakout, wait for the candle to close past it on the 5-minute chart, and still plan on the retest, on taking the retest. Okay. I think those are the main ones we talked about. Rule number 2, don't look at your P&L. At your P&L during trades. Now, this one is going to be a fun one that I want to help just kind of build your holding muscle a little bit. All right. Rule number 3, when you place a trade, when you get triggered into a trade, immediately walk away from the computer for at least 30 minutes. That one's going to be tough, huh?
When you get triggered into a trade, immediately walk away from it. Yeah. Oh my. For at least 30 minutes.
Do you know how to set OCO orders? Which is like a target and a stop at the same time?
Yeah, I think they call it.
Probably call something else. They call it what they call it, shield.
Some other name.
Shield orders.
Yeah, I know how to do that.
You do?
Mm-hmm.
Okay. So if you know how to do that, regardless of whatever it's called, that's what I want you to do. So for example, in the case of Square, what you would have done is you had your entry here, you have your stop up here, and you walk away for 30 minutes. So you set up you set your entry at the green line, you set your stop up here at the red line, and you set a target here at the purple line, whatever. And when you set the trade up, after you get triggered in, just walk away for 30 minutes.
Wait, I think on the on TradeNet, I've done that, but I only do that when I'm already in the trade.
Right. So that's what I mean. So when I say when you get triggered in, so like when you get into the trade, set up that so you can walk away from the computer.
Oh, okay.
Yeah. So have a stop and target in place. All right. Also, rule number 4, have your target more than your stop. So if your stop is 60 cents, have a target bigger than that.
Okay. So if my stop is 60 cents and my target should be like around 60 cents or higher.
Higher, definitely higher. 80 cents, 90 cents, $1, $1.10.
Okay.
Yeah, always more. your stop is 35 cents. Should be 75 cents as a target, something like that.
Okay.
Now here's one I want you to do for a while as well. Rule number 5, place no more than 2 trades a day. Rule number 6, wait at least 6 minutes after market open to place a trade. Rule number 7. So let's see. Rule number 7. Once you've come back after rule number 3 and you haven't hit your stop or hit your target, feel free to move your stop a little bit. Very small movement. And then wait another 30 minutes after you've done that.
Okay.
Okay, because rule number 8 is going to be, if after 1 hour has passed and you haven't gotten stopped out or hit your target and you are profitable, go ahead and exit. Now this is going to be hard for you because, again, this is, I'm talking about an hour. Like, I think the longest you've held a trade so far is like 15 minutes. I know this is going to stretch you a little bit, but I promise you this is going to help. Now, I'm not going to put this as a rule. I'm going to come down here and kind of put this as a suggestion, okay? I would say start practicing the 2 minute, the 1, 2, 3 minute charts for the first 30 minutes of the day.
Okay.
All right.
I feel like I used to hold on to trades much, much longer when I first started.
Probably. Yeah, probably. You're just trying to get the money. What's happening right now is you're trying to get the money back. That's what your brain's doing. My only advice on that. My only advice on that is don't sweat it. Like, just practice and pretend in your mind that money is gone, and we're gonna have to get it back later.
Yeah, I need to work on that because every time I'm thinking about, oh my God, I'm like 17,000 in a hole right now. I'm like,
I know. Trust me. It's brutal. I totally get it. Totally get it. And my thought is, here's what I would suggest that you do. So as some homework is, I want you to read a book for me, okay? It's called "You Are a Badass at Making Money" by Jen Sincero. Read that book. Okay.
okay.
And there's exercises at the end of every chapter. So I'll make you a deal. If you read all of those exercises and fill them out and email them to me before February 1st, I want to do another session with you. I'll do the next session for 50% off, okay?
Okay.
If you can do that for me. So between now and February 1st, you read that book, you do the exercises in the book, and either screenshot them, take a picture with your phone, handwrite them in the email, whatever you need to do, and you email me each exercise from that book, and next session is 50% off, because I want to, number one, incentivize you to do it, but number two, that book is going to change your life. Because here's what I want you to do is I want you to go make the $17,000 back in insurance. So whatever you're doing now to generate income, on the side, just go make that money back. Because you'll be able to get it back, I promise.
Mm-hmm.
You're good enough. I know you're good. I know you're skilled at it enough. So whatever you need to do, whatever assets you need to acquire mentally and personally to achieve that, I think I think you have the ability to make that happen. So we'll go get the money. You'll go get the money back. You'll make it back in sales or commissions or upgrades or whatever. And then it won't be that big of a stressor for you. Go, okay, cool. That was a fun lesson learned. Let me, keep going back through and just understanding it and getting it. Because once you have the money and it becomes a little bit easier for you, you'll have tons of opportunities out there. But as far as the trading goes, I just want to make sure between now and you really, really start hitting it hard again, I just want to make sure your timing is perfect. So tell me this, how much, how are the fees at TradeNet? So if you don't trade for the rest of the month, is that going to hurt you?
No, because the fees, it's like $1, what is it? $1.53 per trade. So let's say $3 per trade.
But there's no platform fee or anything?
There is like monthly, you mean?
Yeah.
No.
Okay. Gotcha. So that's kind of what I was asking. So that $300 could potentially last you until March if you just didn't trade.
I know.
Is that correct?
Yeah.
Okay. So what I want you to do is, that's going to be another goal, is keep that, just don't lose that 300. Even if you take if you're taking $15 per trade and it costs, you said $3?
Yeah, $3.56 per trade, like selling and buying.
Gotcha. So as long as you can cover that, that's going to be kind of the goal. As long as you can cover more than that, you should be fine. So keep that money around, because I want you just to practice and make sure you have the money there, and just, like I said, start saving up and grinding and working hard, so that in 2019, because in a perfect world is, I think I would like to have, just like I said, at least one more session where I go, okay, here, you have some rules. We've looked at a lot of the trades. I have an obvious idea of what you're doing wrong. And we build you some rules around that. Now I give you those rules. You go follow those rules. And then we go back and look at them again to see how you progress over those 3 days. And you don't have to actually take a trade. So again, there's no platform fees or anything. You could just go in to your charting software and just say, okay, Jeremy, here's where I would have gotten in and here's where I would have gotten out. Because one of the things I do know is that you're fearless. You're not afraid. You'll take the trade. So that's a good thing, by the way. All right, you don't really have any fear.
Right.
Which is great. Wonderful. So you're not afraid to take the trade, and that's not really going to be anything that's going to hold you back. So perfect.
So technically, just don't trade right now. Like.
Correct. What I want you to do right now is just practice your trading. Just tell me where you would have gotten in and where your stop would be. And that's all I need to know. Don't even worry about the share size. Don't even worry about that. Just for the next few days to weeks. I want you, especially through the rest of the year, but I want you to email me, obviously, because I'm your coach now. I got your back. I'm here for you. Okay. I want you to email me pretty much every day saying, hey, here's where I got in. Here's where I would have gotten in. Here's where I would have gotten out. Here's where my stop would have been. What do you think?
Okay.
So that way we can kind of progress and get your timing a little bit better. Because here's the things that are the things that you're struggling with the most. So you lost a lot of money. You're stressed and you're pissed off about it, and you're trying to get it back. So anytime your brain sees a profitable trade, you're taking it off the table. But since you've already lost so much money, your brain also knows it's pretty much a mathematical impossibility over the next few months to get that money back. So when you do have a loss, your brain just accepts it and just holds it, and you lose the whole thing.
Yeah.
Or, number 4, you're just not holding trades nearly long enough right now. Even if you did it earlier, you're still not holding trades long enough. And number 5, you're getting into the trades too late. And the reason you're getting into the trades too late is also just because you're afraid. You're afraid of taking the wrong trade and losing money.
Right.
So right now it's just the losses are really just holding heavy on your shoulders. So my theory in this predicament is going to be just practice and get your timing down where you go, okay, I think I have you just practice walking away. You practice letting the trade do its thing. And really you practice also, like I said, watch the 1 and the 2 minute charts and 3 minute charts for the first 30 minutes of the day, because you are a good trader. Believe it or not, your gaps, you're choosing the right stocks, you're playing it the right way. And the fact that you played square the way you did tells me everything I need to know. You have a good feeling for the market. You just need to be a little bit more patient. And you got to realize that you lost the money. Hey, it's okay. Go make more. Don't stress about it. Just go make more money. I know you're great at sales. Go crush it. Get more money, and then you'll have more money to trade with again, and you'll feel a lot better about the whole situation.
Okay.
What do you think?
Perfect. I like it.
All right, beautiful. So we got rule number 6, 7. We got rule number 8. So that's telling me, how you can move your stop and all that kind of good stuff. And before I go, I want to give you kind of like a realistic month, by the way. This is what I want you to kind of have, just like a very realistic expectation of how your month should look when you do start your trading back again. So in a sense, let's say you take 40 trades a month. 40 trades a month. That's just for right now. So as you're taking those, as you're practicing, you're getting 40 trades a month. It's like, okay, cool. 20 of those will be losers. And you'll lose, if you do it right, 0.7 Rs on average. Okay, 20 of those should be winners. And if you do 1.4 Rs on average, so if you do the number, if we do the numbers, this is 14 Rs, and this is 28 Rs. That means if you do this correct way, that's a 14 R month, which is really, really profitable.
Okay.
So just think about those numbers: 20, 20, 0.7, and 1.4. So meaning when you lose, because what's happening right now is your stops are so tight, you're very rarely losing less than an R.
Mm-hmm.
So what's happening for you is you're either losing a full R or you're winning very small. And so that's the recipe for disaster. That's why you're having a red month every month. So put your stops, here's gonna be another suggestion, is put your stops looser. All right.
Put my stop closer, you said?
Looser.
Oh, looser. Okay.
Yeah, looser. Because if you can lose,
that's more money you're losing.
Well, not with the R system, right?
Okay.
And you're familiar with that, correct?
Right.
Because with the R system, you're still going to be, the math is going to be always the same. You're either going to, if you have a $15 risk or $50 or $100, if you have a 10-cent stop and a $100 risk, you're going to do 1,000 shares.
Mm-hmm.
If you have a $1 stop and a $100 risk, you're going to do 100 shares. In either situation, you're going to lose $100. Right? Do you need me to show you the math on that?
Yeah.
Okay. So let's hop over here to Square. And let's say you took an entry here at the red line and your stop was the blue line. So your entry was, let's just say 72.60. And your stop was, let's see, 73.20. Okay. I don't remember if those are your exact numbers, but let's just say for right now. So 73.20 is was your stop loss, and then your entry was 72.60. So that is mathematically 60 cents of risk, right?
Right.
Okay. So if your R is 15 and you divide it by 60 cents, you're going to come up with a number. I don't know what that number is. So
that's 25.
15 divided by 0.60?
Yeah, that's 25.
Heck yeah. Beautiful. So you're exactly right. So it's 25. So that'd be 25 shares. It's like, okay, so we have 25 shares. Now, let's say that you put your stop at 73.60. Okay, 73.60 would have been an entire dollar.
Mm-hmm.
73.60. So 15 divided by 1 equals 15.
Mm-hmm.
Now, your risk on both trades is the exact same. It's 15 bucks.
I see. Okay.
The thing with this trade up here, so the one with the stop way up here, what's the chances realistically that you lose a full R on that trade? It's like, it's probably pretty small, right?
Yeah.
It's like, well, I don't think it's going to go all the way up there. You know, eventually it'll probably go lower, and so you can lower your stop over time, and you'll be able to lose, small in the trade. The thing is, what most traders will do is they'll put their stops really, really tight. And I'm not saying you have to do this forever, by the way. I'm just saying for right now. Because if your stops are a little bit more loose, it gives you the ability to be wrong smaller. And being wrong small is the key to winning at this game. It's not making money. That sounds crazy, I know. But it's the exact opposite of what everyone thinks. Everyone thinks the stock market's all about making money. The stock market is about not losing money. Because all you need is one really good trade a month to do well. And what will happen is your skills will just continually improve. And as your skills improve, you'll get better. You'll be able to take different risks. You'll be able to feel it out. And you can turn into someone like Mir Barrick. But for right now, it's like you're going against a pro, and it's just going to be really, really hard. So we have to spend the time preparing to get that skill level, right?
Right.
So if you have a tighter stop, you get stopped out less, and you get to move your stop and get to stay in the trade longer. And if you stay in the trade longer, then you get to build the holding muscle, which is important. And here's the crazy thing, by the way. If you had put your entry here and put your stop way up here and held it for a whole hour, look at that S curve. You would have made, good money on that trade. Even with a $1 stop, you would have made good money.
Oh.
Because the stocks that you're trading, Alexandra, don't need a tight stop. If you're trading Tesla, Square, Nvidia, Apple, right? You can use
they need at least 1 to 2.
Yeah, which is totally fine. That's totally fine. I mean, I don't care. For example, if you trade Amazon, you're going to have like a $10 stop.
Oh, no.
So let's not worry about the size of the stop. That's irrelevant. Right? That doesn't matter because you're going to have the same amount of shares. The shares are going to change. Your risk is always going to be the same. So if your risk is 50, for right now, it's 15. As you increase your risk, right, you have to do recalculations of shares. For example, if your R is 500.
So if my R, let's say if my R is 15, and if I'm trading Tesla, which was crazy. So do you think I need a 2R?
Well, let's go look at Tesla. So let's just go practice. So let's say you took a trade on Tesla right here. So you played this double top. All right, 347.11 by 350.46. Okay, that's huge. It's over $3 of a stop.
Yeah.
Right?
Mm-hmm.
So it's $3.35. So 15 divided by 335, which is going to be close to 4 something. So 4.4. So you would either take 4 or 5 shares on that trade.
Okay.
So I know it's not a lot, but that's okay. Right. So remember, it doesn't matter right now about how much it is. It matters about
Yeah,
the
it's just about the practice right now. It's not really how much money it is.
bingo, because you'll go get more money.
Right.
You can always make more money. That's easy. You're gonna go out and, like I said, do really great and do a lot of sales and just crush it and make more money. That's fine. But this process is something that you can use forever, right? For the rest of your life. And you have kids and you can teach them how to do this, and they don't have to go to college, and they can save all this money. And
Yeah.
you know what I'm saying? I mean, it's a skill that you can use anywhere in the world.
True.
So we just have to get that process down of, okay, what am I looking for? Where am I getting in? How am I doing it? All that kind of good stuff, right?
Okay. Yeah.
What other questions do you have for me so far?
You pretty much answered most of the questions that I had.
Beautiful. All right. So I'm going to add 2 or 3 more rules, and then we're going to be done. Rule number 9, if you place your first trade of the day and you win, but less than 0.7 Rs, be done for the day. Okay, rule number 10, if you place 2 trades and the net result is 0.7 Rs or less, be done for the day. Rule number 11, if you are in one trade already and you have not locked in more than 0.7 Rs with a stop placement or something, then wait to take the second trade. Now, does all that make sense?
Yeah.
Okay. So again, I know your R right now is small, but don't worry about that. This plan, Alexandra, will work regardless of how much money you have. Okay, because remember, I coach people with $10,000 Rs also.
Mm-hmm.
An R is just an R. Risk unit's just a risk unit. It's no longer money, right? You have to think about it as just a skill, as like a poker chip. It doesn't actually exist. It's just numbers on a screen. So when we're doing this, we have to go, okay, this is my risk, this is the plan, and then here's what I get to do is at the end of January, early February, I get to see if you follow this rule.
Oh Lord. Yeah.
Yeah, because the next time, like I said, I want you, even if you don't do it with real money, it's okay. Like I said, you are allowed to, by the way. You're allowed to do whatever you want. But
Is there like a site that I can go on so I can do like paper trading for free or something?
Yep, the one right here that I'm using.
TradingView? I have TradingView.
Yeah, look at the bottom of the chart. Right here it says paper trading.
Oh, okay.
Yep. So you click on this bad boy, and when you click it, you can right click the screen, and you see where it says trade.
Mm-hmm.
You can do buy, sell, create new order. You come down here, fill out the whole order, and it just goes to your paper trading account.
And it's free. I don't have to pay for it?
Yep, correct.
Oh.
Yeah.
Okay.
I'm fairly certain. I'm fairly certain.
I'm gonna be practicing with paper trading, and
Yeah, I'll say I'm fairly certain it's you don't have to pay for it.
do you think that's a good idea? Because sometimes I've heard people said that when you stay too long on paper trading, it's not good, because when you do have your real account, then
I agree. Oh yeah, no, I agree. I'm not going to argue with that, but I think just do this for the next until 2019. How about that? Just paper trade for the rest of the year, which is like, well, I'm just getting one more day.
Okay.
I would say just do it for 2-3 weeks until I kind of give you the thumbs up. I just want to make sure you're able to implement these rules, like you're comfortable. I just want to see if let me just see that you've blended everything that I kind of said in today's session.
Mm-hmm.
And let me kind of give you 2 or 3 more pointers now that you place a trade. And then once you do that, I'll say, hey, okay, cool, thumbs up, go back and start trading it. And then we'll go from there.
Okay.
Does that sound good?
Yeah, sounds good.
Okay. Like I said, I totally understand. Paper trading is not real. I get it. But here's a question. What's the difference between paper trading and real trading?
I guess the money?
Your connection to money.
The connection to money, exactly.
Yeah, because the numbers are the same.
Yeah, it's the exact same thing. And your brain is saying, well, it's not really real money.
Exactly. So tell your brain that it is real money when you're paper trading. And tell your brain that it's fake money when you're real trading.
Yeah.
Harder, easier said than done, I know. But remove the connection to money, and things will make it a little bit easier. Now, at the same time, you don't want to lose all your connection because you want to, like I said, it is a process, and you can't cheat the process. But once you get this nailed down, I think you're gonna crush it. So this is the foundation of the plans. I'm gonna give you your homework. Homework is complete. Zen Sincero, you are a badass. I'm making.
Did it have it in audio?
It is on audio. Yep, it's on YouTube. You can find it on YouTube. But I don't think the exercises are there.
Oh, they're not on audio. Okay. It was an Audible, like Amazon or something.
You can definitely check. I know for sure it's on Audible, and you can also find it on YouTube. I just don't know if the exercises are there. You don't have to do the exercises. Like I said, that she will list some of the ones that you do, but I think that you'll find it really useful, and it's a good one that kind of just opens your mind a little bit. I like it a lot. But anyway, I want also some other bigger homework is make back that 17 grand through sales before March 1st. Okay.
What, the 17th out?
Is that possible?
Oh, but no, because I kind of I didn't renew my license, so.
So that we can delete that one.
Because what happened is I am now, because I used to go out so much in insurance, so I didn't really have the time. But now that I'm also the caretaker of my mom, so I can't really go out because my mom is ill, sure. So I have to find a way to make this work.
Sure. No, I totally understand. Totally understand. Got it. Still think you'll like this book a lot. But yes, we'll find you. Like I said, you email me. It's not really homework, but just email me the trades that you take. And we will review them together. Okay.
Mm-hmm.
And just kind of nail this down and get this rocking and rolling.
Are you able to email me the journal you just wrote?
This that we created?
Yeah.
Oh yeah, of course. Absolutely. I'm gonna do that along with the recording. So, any last questions for me?
Okay, so now, my other question is, I saw on your website you have, you have a trading room?
Uh-huh.
A day trading room?
Yep.
So does the coaching come with that, or is it separate?
Great question. So this is just entirely separate. In fact, we're actually closed the next 2 weeks anyway. We do that kind of like at the end of every year.
Mm-hmm.
Yeah. So the coaching is just going to be me and you just kind of working together. Like I said, you email me back and forth. You let me know, like, as far as training goes. I will have a free week though, which I would really like you free to be there. It's at the end of January. I only do it twice a year.
Mm-hmm.
So it's going to be end of January. I'll be able to send you a link and you can kind of pop in there and see how we trade and all that kind of good stuff. I think you'll like it a lot.
Mm-hmm. Okay. And what's my other? The other question I had was let's see, I forgot.
No worries. Well, if it pops in your brain, just shoot me an email.
Okay.
Does that sound good?
Yeah, sounds good.
Heck yeah. One last thing I'll let you know about. We have, if you want to keep track of your trades this way, we also have a journal that you can use on the website. So when you log in and come to the class, you can see like trading journal right here.
Okay, yep.
So that's another way. If you use TradingView already, it's really useful because you can pop over here and, like you said, you could put in. Do you know how to do a screenshot in TradingView?
Mm-hmm.
So you take this little camera right here, throw it in there, and you can just kind of fill all of your plan out. And then so next time we have our session, you can have all this in the journal, and just another way to keep track of your trades. You don't have to by any means. Sometimes it's useful because you can put in your your notes, like did you chase the trade or not? Was it a good entry? Did you bail too early? So on and so forth. And so like I said, sometimes that can help, but that by no means has to. I know you already can keep track of your trades through TradeNet, through the trade history, but just as you're doing paper trading, if you want to keep track of them, this is another way you can do it.
Okay. And okay, I remember a question. So how many session per coaching?
So this is going to be, so it's realistically just one session. So this session, we did it for 2 hours. And Alex, I'll send you the recording. All of the email correspondence and everything that we have is included in the session. So I'm not going to bill you by the minute or anything. I'm not an attorney. So it's just going to be, pretty much like I said, each session is just a flat rate, and then all correspondence, emails, phone calls, everything that's included with the session. So if you email me 100 times between now and February 1st, then that's totally fine.
Okay. Let's see. All right. Sounds good.
Beautiful. All right. Well, it's been an honor working with you. Thank you for being here, and thanks for giving me so much insight into your trading and for allowing me to kind of help you along this really exciting journey.
Awesome. Thank you so much. You've been a great help.
My pleasure. I will send you everything in the email a little bit later, okay?
All right. Thank you.
All right. You got it. Bye.
Bye.